Right. So coming to the next concept-wise case study, now coming to the chapter number 6, that's to the study material of the ICAI, wherein we have the completion and the review. Okay. So CS Neha, a partner in G and Associates, is carrying out the stat audit of ABC stores for 20 to 23, and she's ready to sign her audit report on 1st July. There are some written representations which are pending with the management of the company pertaining to such an audit, and she sent Deepak, her article trainee, who is also a member of the team, to the company's office for collection of the same. On returning back, Deepak tells CS Neha that major stocks of the company got destroyed because of a fire in their plant on 27th of June 2023, and it has affected the company's operations badly. However, the business operations are likely to be resumed by the management at an alternate place, right? So it's a subsequent event after the balance sheet date. CS Neha postponed the issuance of the audit report to consider the impact of such an event on the financial state of affairs of the company. She wants the management to disclose the impact of this unfortunate event in the financial statements, to which management is disinclined. After the management's refusal, she issued her audit report on 15th of July. The management of the company seeks an appointment from CS Neha to discuss an important matter. Yes, on 20th of July 23, they informed her that the company had lost a lawsuit filed against it by one of the creditors on 18th July in a fast track court, and now the company has to pay the plaintiff a huge amount of 2 crore. The event causing the lawsuit arose after 31st of March 23, right? So it's not, the position did not exist on the balance sheet date. CS Neha is a bit perplexed, and her first question to the people from the management visiting her office was whether audited financial statements have been made available to any third parties or with filed with the regulator. The management responded negatively. Now, CS Neha wants to amend the financial statements to impute the impact of this lawsuit on the financial affairs of the company. This time, they agreed and amended the financial statements accordingly to cover the impact of both the events, that of the fire in the plant and losing the lawsuit. But they requested CS Neha to issue a new audit report against the earlier one dated 15th July. Management amends the financial statements, which are finally approved on 25th of July. CS Neha issues a new audit report. Considering the above situation, answer the following questions. Okay. Right, so it is all the case study mainly regarding the essay 560, which is regarding the subsequent events occurring between the date of the financial statement and the date of the auditor's report, and facts that become known to the auditor after the date of the audit report. What would be the appropriate date of signing the new audit report? So when were the financial statements, amended financial statements, approved by the management? 25th of July. So straight away on or before 25th of July 23. CS Neha, right, like would have taken into account a lot of procedures to get knowledge of the events occurring after the balance sheet date up to the date of audit report related to the company. Which of the following does not fall under the audit procedures of SA 560? Obtaining an understanding of the management process? Yes. Inquiries of the management regarding subsequent events? Yes. Reading the minutes of the meetings of the board after the balance sheet date during the period? Okay. Getting the interim financial statements prepared till the date of audit report mandatorily as a condition to issue the new audit report? No. Right. So if available, you also read the latest available interim financial statements, but it's not mandatory as a condition to issue the report. With respect to the first audit report dated 15th of July, which type of opinion was most likely provided by her? Because management had not made the disclosures in the financial statements regarding the misfire is the loss on account of the fire or so. Right, so it says that the management, yes, they have not made the disclosures, right? She issued the report. Management is disinclined to make the disclose the impact in the financial statement. So modified, unqualified disclaimer, include a EOM or an other matter paragraph, it would lead to a modified opinion. As adequate disclosure, right? The management, they've not given the information in the financial statement. So it is going to affect the true and fair view. Then, with respect to the new audit report, which type of opinion is most appropriate? Disclaimer, unmodified, adverse, unqualified, and the statement in the emphasis or other matter. Obviously, now they've given effect to both of the matters, so it will be unqualified, along with the statement in the emphasis of matter, other matter, which will mention that the audit procedures are restricted to the amendment and also the two audit dates of the audit report. The fire event occurring on 27th of June in the company plant requires the following action on the part of the management: disclosure, adjustment, waiting for the insurance company to settle the claim, preparing financial statements afresh. So obviously it's a non-adjusting event as per the AS4 in AS 10. So it only requires the disclosure in the financial statements because the fire did not exist as on 31st of March. Okay, right. So that's an entire case study regarding the SA 560, which is the subsequent events.